The crypto market is sending some seriously mixed signals right now, and you need to know what's going on. While some analysts are warning about a classic summer slowdown, pointing to historically bad months for Bitcoin, others are seeing massive signs of an explosion just around the corner. Wall Street whales are quietly piling into Ethereum at an insane rate, with some new wallets scooping up over 856,000 ETH. At the same time, the government's strategy of financial repression is making Bitcoin's fixed supply look better than ever as the U.S. racks up $18 billion in new debt every day. But it's not all good news. While big names like Semler Scientific keep buying Bitcoin, there are growing concerns about privacy, especially with Coinbase's plan for an everything app that some are calling dystopian. With the Fed expected to cut interest rates soon, is this the quiet before the storm or a trap for unwary traders? In the latest video from Altcoin Daily, the host explains why he expects a strong crypto rally in August, even though the month is historically slow. He points to the unstoppable printing of money, referencing Natalie Brunell's take on Fox Business about the rising global M2 supply. The U.S. is projected to issue about $18 billion in debt every day for the rest of the year, which makes Bitcoin's fixed supply look very attractive. In my opinion, the video does a great job of capturing the two-sided coin of institutional adoption. The excitement is definitely real. The recent launch of spot Ether ETFs has opened a fire hose of new capital, and firms like Bitwise are clearly making big moves. However, the caution from Benjamin Cowan about pulling forward demand is a very important point. This isn't just a crypto-specific idea, it's a classic market cycle dynamic. When everyone gets bullish and buys in anticipation of future growth, it can create a fragile peak. The narrative that's so positive on the way up can quickly be blamed for the correction on the way down. It seems the market is currently caught between the immediate thrill of new money and the long-term question of whether this growth is truly sustainable. In the latest video from the Crypto Rover channel, the host explains that Bitcoin's next move seems very predictable. He points out that as long as Bitcoin stays above its upward sloping support line, the uptrend is intact. The price is currently bouncing off the 50-day simple moving average and is still trading within a large bull flag pattern. A significant amount of short liquidations are sitting between $119,000 and $121,000, which is a key area he's watching. Historically, summer months like August and September have a low volatility, and he expects that pattern to repeat before a final push in the fourth quarter. The video suggests we're about 32% through the halving cycle, nearing the final stage of the bull market. The host also talks about the M2 money supply, which is expected to see a small dip in September, potentially causing a temporary drop in Bitcoin's price. It's my opinion, but the sentiment in this video aligns well with the broader market's current feeling of anticipation. We're seeing some conflicting signals right now. For instance, recent data shows significant outflows from spot Bitcoin ETFs for several consecutive days, which feeds into the summer lull narrative the video mentions. At the same time, the hype around the upcoming launch of spot Ethereum ETFs is palpable. Many analysts believe these could attract a new wave of capital, supporting the idea that Ethereum might be getting ready for a big move against Bitcoin. It really feels like the market is holding its breath, caught between short-term bearishness and long-term optimism for what Q4 might bring. In the latest video from the Crypto Tips channel, the host argues that what the Federal Reserve does with interest rates doesn't really matter for Bitcoin. He points out that after the market bottomed around $15,500 in November 2022, Bitcoin's price shot up despite 5 straight rate hikes. The speaker believes the Fed's real purpose is to widen the wealth gap and keep people in debt. He also touches on serious problems in the U.S. economy, like tariffs and rising grocery costs, which he says are pushing people toward Bitcoin as a necessity. The video then tackles the rumors about China banning crypto. Citing a tweet from Wu Blockchain, the host clarifies that China has not banned individual crypto transactions, only institutional ones. In fact, Hong Kong is acting as a crypto-friendly pilot zone for China. Underground mining continues, and Chinese officials are showing interest in stablecoins. He recommends the Corbett Report as a good source for well-researched news. The speaker's take on the China ban is particularly timely. His point about Hong Kong serving as a crypto-friendly test area for mainland China has proven to be quite accurate. The recent approval of spot Bitcoin and Ether ETFs in Hong Kong is a massive development that reinforces this idea. It suggests China is cautiously engaging with digital assets through a controlled environment rather than pursuing an outright nationwide ban. This makes the recurring China bans Bitcoin headline feel like old news used to stir up market fear. While the host's views on the Federal Reserve are quite strong, his underlying point about inflation and economic instability driving crypto adoption is a sentiment that is gaining traction well beyond just the crypto community. In the latest video from Lark Davis, he talks about the positive signs in the crypto and stock markets, suggesting big things are coming. He points to predictions from Goldman Sachs for 3 consecutive rate cuts from the Fed starting in September, which would be very bullish for Bitcoin. Tom Lee also expects a massive rally in August. For Bitcoin, the immediate mission for bulls is to reclaim the $116,000 level after bouncing from support. The real story, though, is with Ethereum. Wall Street is finally paying attention, and whales are accumulating ETH at an incredible rate. Since July 9th, 14 new wallets have scooped up over 856,000 ETH. Public companies like BitMine are also buying heavily. The main hurdle for ETH is the $4,000 resistance level. Once that breaks, we could see fireworks. The video also quickly looks at other coins. Solana needs to break $173 for a real breakout, while XRP is showing strength after breaking its downtrend. He ends by saying that even though August can be a shaky month for markets, big players are clearly buying, so it's important not to get scared off by short-term price swings. It's my view that the video's focus on Ethereum's accumulation is spot on. The numbers being discussed aren't just hype. Recent on-chain data from various analytics firms confirms that large wallets and institutional players are indeed snapping up ETH in a big way. This feels like a direct response to the new ETH ETFs getting the green light, as major financial players build their positions. The narrative about Fed rate cuts fueling the market also holds water, with many economists now seeing a September cut as highly likely. However, the market's excitement might be a bit premature. The Fed remains very focused on inflation data, and any surprise uptick could easily push that timeline back. The real, lasting trend seems to be the steady march of institutional adoption into crypto, with Ethereum currently being the main attraction. In the latest video from Coin Bureau, Guy explains why it feels like the global financial system is on the verge of a major change. He points out that the version of capitalism we have today is under a lot of stress from massive government debt, rising inequality, and a system that quietly punishes savers. The video introduces a concept called financial repression, which is basically a hidden tax. Governments and central banks keep interest rates lower than inflation to help manage their huge debts, like the $37 trillion owed by the US. This means your savings lose value over time. This video does a great job of connecting complex economic ideas to the feeling many people have that something is off. The concept of financial repression is especially powerful because it's not a conspiracy theory, it's an observable economic strategy. We've all seen prices rise much faster than the interest rates on our savings accounts, and this video clearly explains the government incentive behind that trend. The idea of techno-feudalism is also incredibly relevant. Thinking about how platforms like Apple's App Store or Amazon's Marketplace operate, it's less about them creating a product and more about them controlling the entire field and taking a cut from everyone on it. This shift from value creation to rent extraction feels like a fundamental change to the system's DNA. It makes you wonder if the competitive, innovative spirit that capitalism is known for is being replaced by something that looks a lot more like a digital monarchy. In the latest video from Crypto's Russ, George talks about the U.S. market's rally, which he predicted. He explains that last week's overreaction to poor job numbers is actually good news because it increases the odds of an interest rate cut in September. According to the CME, the probability of a rate cut has shot up to over 90%. He thinks an upcoming jobless claims report on Thursday could even push the Fed towards a 50 basis point cut. He also mentions that Trump is finding a replacement for a Fed governor, selecting someone who favors lower rates, which raises questions about the Fed's independence from the White House. On the crypto side, Bitcoin has climbed back above 115, and he believes it's on its way to 119. More importantly, Ethereum has made a strong comeback to around $3,700, which supports the idea that whales were buying it up while it was down. He notes that other coins like Solana, XRP, and Semler are still a bit down, but expects them to bounce back as Bitcoin recovers. The general feeling is that last week was just a temporary shakeout, and all the macro factors like government spending and central bank policies should ultimately drive more people toward Bitcoin. My take is that the video correctly identifies the market's weird relationship with economic news right now. Bad news is good news. The market is absolutely fixated on when the Fed will finally cut rates, and any data suggesting economic weakness, like rising unemployment, just fuels that expectation. The political angle with Trump appointing a new Fed governor is also a real factor. The line between the Fed and politics seems to get blurrier every year, and that uncertainty can definitely make markets jumpy. I agree that Ethereum's quick bounce back is a very telling sign. While Bitcoin sets the overall mood, ETH's strength shows there's serious confidence behind it, likely tied to the new ETFs. It often feels like the rest of the altcoin market is just waiting for Bitcoin to give a clear signal before making a big move. In the latest video from Crypto Wendy, she talks to viewers who might be struggling with the current crypto market, reassuring them that they're not alone. She points out that historically, August and September have been the worst performing months for Bitcoin, referencing a chart from Cointelegraph that shows a lot of red. What's interesting is that even during the huge bull market of 2020 and 2021, September was still a down month. On the flip side, October often brings a big turnaround. For instance, October 2021 saw gains of nearly 40%, and October 2020 had a 27% increase. Looking ahead, there are 3 big events in August that could stir the pot. First, there's a Ripple versus SEC update on August 15th. Any delays in the case could be a negative for the market. Second, the US CPI data comes out on August 13th. If inflation looks cooler, it might give crypto a boost. Third, the Jackson Hole meeting runs from August 21st to 23rd, where Fed Chair Powell's tone could either help or hurt crypto prices. On a more positive note, she mentions that Eric Trump is telling people to buy Bitcoin and Ethereum, and that public companies reportedly bought over $2.5 billion in Bitcoin last week. Her final thought is that we should prepare for some volatility and keep an eye on what the Fed does, while also being optimistic for crypto ETFs to get approved, which she predicts will happen in the fourth quarter of 2025. It's interesting how much weight is still given to historical monthly performance in crypto. While the Uptober trend is a popular one, the market is in a very different place now than it was in 2020 or 2021. The introduction of spot Bitcoin ETFs has brought in a new type of investor and a different flow of capital that might not follow the old seasonal patterns. The events Wendy mentioned for August are definitely on everyone's radar, but the Ripple case has been dragging on for so long that the market seems a bit desensitized to anything other than a final, decisive judgment. The institutional buying she mentioned is perhaps the most solid point. That $2.5 billion figure shows that big money is still accumulating, which acts as a stabilizing force that wasn't as strong in previous cycles. Her prediction for ETF approvals in late 2025 feels a bit conservative. Many in the space are hoping the political pressure from the upcoming election might speed up that timeline significantly. In the latest video from The Modern Investor, the host talks about how Bitcoin is becoming more and more connected to real estate. An Australian company called Block Earner is now letting people use their Bitcoin as collateral for home loans without having to sell it. This comes after news that Fannie Mae and Freddie Mac might be thinking about something similar and that a new bill could let 401k funds buy Bitcoin. He also points out an analyst's wild prediction of a $47 million Bitcoin in the future and Cathie Wood's forecast of $2.4 million. The video then shifts to corporate buying, noting that Semler Scientific just bought another 210 Bitcoin for $25 million at an average price of $118,000 per coin. Their total holdings are now almost 5,000 Bitcoin. Finally, he shares his concerns about Coinbase's new Everything app, which plans to combine a wallet, trading, payments, and social messaging. He calls it dystopian, drawing a direct comparison to China's WeChat, where a single app controlled by the government monitors all user activity for a social credit score. He feels this goes completely against the idea of freedom and privacy that crypto is supposed to represent. It's my opinion that the host's strong reaction to Coinbase's super app is spot on and reflects a wider anxiety in the tech world. The idea of an everything app is sold as convenience, but it's really a data collection goldmine. In the West, there's a much different cultural view on privacy than in China, where apps like WeChat are the norm. We've seen years of scandals from companies like Facebook over how they handle our data. For Coinbase, a company already required to report user information to government bodies, to bundle social messaging, private chats, and all financial transactions into one place feels like a step in a very concerning direction. It's the complete opposite of the decentralized, private ethos that attracted many people to cryptocurrency in the first place. The convenience just doesn't seem worth the risk of creating a centralized choke point for our digital and financial lives. In the latest video from the Crypto Jeb channel, Jeb lays out why Bitcoin is in a really tight spot right now. He explains that after dropping from $119,000 back down to $112,000, Bitcoin is now wedged between solid support and a wall of resistance. The big problem is that the bounce back up seems a lot weaker than the drop that preceded it, which has him concerned. He points out several key resistance levels overhead, including the 20-day exponential moving average and, most importantly, the $118,000 mark. Jeb's cautious but long-term bullish stance really captures the current market mood. It feels like the entire market is holding its breath. The consolidation he talks about isn't happening in a vacuum. It aligns with recent news of outflows from some of the spot Bitcoin ETFs after a period of massive inflows. It seems the initial hype has settled, and now the market is looking for the next major catalyst. Many analysts seem to agree that this sideways or downward drift could be a healthy phase, shaking out speculators before a more sustainable move up later in the year, possibly tied to changing macroeconomic conditions or renewed institutional interest. His warning to traders about leverage is especially relevant in a choppy market like this where sudden moves can wipe people out.